Shah is joining us now to talk more about markets and investing. Sachin, afternoon. Thank you very much for joining us. I'd like to understand your thoughts on this, NBFC and microfinance kind of names. Some of them, ever since the numbers have come out, be it Poonawalla FinCorp, be it Credit Access Grameen, have been doing very well. How are you placed on some of these, NBFCs, Credit Access kind of microfinance kind of names, who actually cater to the mid-tier MSMEs and even the retail client?
Hi Ajay, thank you for having me on the show. So, on our positioning in terms of the microfinance companies, as a disclaimer, we have a decent holding in one of our portfolios in Credit Access Grameen. And we were quite happy looking at the results that they delivered. But more than that, they also had have a fantastic strategy going ahead in terms of the growth. So their clear guidance is to grow at 25-30% over the next 3 to 4 years, which is literally doubling their book and also maintaining their profitability, the margins and the ROAs, right? So clearly at the ground level, things seem to be much better. Plus, they also seem to be getting into some of the new businesses to de-risk themselves from the microfinance. Also, in terms of their geographical concentration, I think they have a clear strategy, where they have laid out that incrementally a lot of their business should come from the non-existing geographies where they are, which is your the Karnataka and the Tamil Nadu and the Maharashtra of the world, right? So they clearly have a strategy which probably will make them much more solid over the next 3 to 5 years. Other than that, we don't have too much of NBFCs. We are largely into the large private sector banks.
What are your thoughts on engineering and capital goods, especially the large cap ones? Though I understand you are interested more in L&T. I don't want a stock reaction, but today one large engineering and cap goods name has been hit because of related party transaction. These are the names which are always called very expensive. If any cut of that sort being offered, would you look at opportunities to build up your positions there? What are your thoughts on this space, the top 4-5 names?
Yeah. So Ajay, I think the most important thing is that today engineering as a space looks very, very promising, right? The capex cycle has kicked off. The private sector capex cycle particularly seems to have kicked off, and our sense is over the next 2-3 years, this trend will actually even accelerate further, and probably it has the potential of becoming a mega trend, and we getting into that virtuous cycle of over not only 2-3 years but over the next 5 to 10 years. So that's a distinct possibility at this point in time. So from that perspective, some of these large engineering businesses or even some of the good quality mid-sized engineering companies are of a lot of interest to investors like us who would like to stay in businesses for next 3 to 5 years and where we see some tailwinds. So yes, any knee-jerk reactions in stock prices and where we see those are not structural challenges or which are not really integrity kind of challenges, we would be very happy to invest in some of those businesses at the right valuations.
Sachin, I also see some of the big pharma names / one of the biggest API exporters also being part of your portfolio. Do you think worse for both these spaces is over now on pricing challenges, export opportunities, raw material prices, all of that, regulatory issues?
Sure, Ajay. So as a disclaimer, once again upfront, we have a position in DV's Lab and we've been investors in this business for more than 10 years now, right? We believe, yes, the worst seems to be over. If you see, and these are again not structural challenges with some of these contract research and manufacturing companies and the CDMO companies, whether it is DV's Lab, Laura's Labs, to some extent even Suven Pharma, right? Some of these businesses have been a part of our portfolio and probably some of them continue to be even today. We believe that these are businesses where again, the mega tailwind is very high in terms of whether it is China plus one, Europe plus one. The Indian chemical companies, Indian pharma companies, which are more chemical oriented, have earned their space under the sun. They have shown that they have the domain expertise. They have shown that, in fact, they have demonstrated that they can actually deliver scale, and also probably they respect the intellectual property rights far better than some of the counterparts on the Chinese side, right? So the customers are very happy giving even larger programs to some of these companies, as long as these companies have the capabilities in terms of the management strategy and the execution of delivering the scale. So we believe this is a mega trend, and current valuations are very attractive for long-term investors.
What are your thoughts on the IT space, given that it is actually leading the rebound right now, and many of the people in the market believe that the worst is over in terms of all that growth slowdown issue, all of that has been factored in. Is it time to cherry pick in some of the IT names, because you have some of the large IT names also in your portfolio?
Yes, Ajay. So you're right. So we believe that the large IT names are probably safer bets at this point in time. The valuations over there seems to have got bottomed out. Whether we will see a very strong growth very quickly, whether in the next 1 or 2 quarters, I'm not very sure. It's difficult to judge. But again, large transformation deals in terms of this cloud migration, is again a mega trend. So if I take a view of next 3 years plus, 4 years plus, and again the valuations are again very much on our side. For when I say our side, I'm talking about investors who have an investor or investment horizon of at least 3 to 4 years. I think a decent double-digit return from the current valuation is a high probability.
One quick last word, Sachin, on auto and auto ancillary. Have you started raising your position in auto ancillary, given that there's a seemingly very clear revival in that space?
So Ajay, as far as auto ancillary is concerned, we have been investors in this space for again last 7 8 years. But we are very clear about one thing, that we would like to be part of the businesses which have not only domestic exposure but also the global markets are a part of their overall revenue. Because whether we like it or not, how much ever secular it is, but in the intermediate there is a cyclicality on the domestic demand. Now, to make sure that our businesses don't go through a very deep cyclicality, it's better to have businesses which have decent exposure to the global markets also. Also, it helps us understand the kind of the global competitiveness some of these businesses have, because at the end of the day, these businesses are very, I would say, open to the global competition, even for the domestic markets. So if your companies are able to supply to global markets, it validates two things. One is that they are a global competitive businesses or products that they have in terms of their pricing, in terms of their quality, and also in terms of their management vision. The other thing also very important is that it helps you ride the domestic volatility or the domestic cyclicality on the demand side.
All right, Sachin, thank you very much for joining us on the show today. That was
Thank
Sachin
you.
Shah of MK. But now Sudeep